Right. So coming to the next one, Sambhav Limited is a listed nationalized bank whose face value per share is 100 each, having its operations across India. Sambhav Limited appointed Mr. Dharam, Mr. Paras, and Mr. Anant as its central joint auditors for 31-32. After making that sure that all of them are qualified to be appointed as the statutory auditor of the bank, Sambhav Limited issued an appointment letter as well as an engagement letter to all of them. But Mr. Dharam was not clear on some points, so he requested Sambhav Limited to slightly change the terms of his engagement. This change will not impact the ultimate opinion on the financial statements. The engagement letter contains the details on the objective and scope of the audit, responsibilities of the auditor, identification of the AFRF. It also contains reference to the expected form and content of the report from all the three joint auditors. Right, so they are talking about SA 210 principal contents of engagement letter. Okay. During the year, Sambhav Limited has acquired another bank called Adi Limited. While finalizing the books of accounts, some adjustments were made to give the effect of the merger. These adjustments were related to determination of goodwill, determination of amount of the minority interest of 75 lakh, some intra-group transaction adjustment of 22 lakh, another adjustment which was made for harmonization of the accounting policies, which was of 45 lakh. Right, so that's regarding the group audit. We have to check which are the permanent consolidation adjustments and the current period consolidation adjustments. Okay. While planning the audit, all joint auditors mutually decided that responsibility of verification of cash book will be entrusted with Mr. Paras. But Mr. Paras failed to detect the fraud committed by the cashier, which he could have easily detected had he properly checked the cash book. That means there is the gross negligence. Okay. This fraud was revealed in the special audit which was conducted on the directions of RBI. Responsibility for verifying compliance with the SLR requirement was entrusted with Mr. Dharam. So now coming to bank audit. While performing the audit on the compliance with the SLR requirement, Mr. Dharam used 12 odd dates in different months of the fiscal year. Mr. Dharam, with his professional judgment, used the below mentioned days. Right, so April to March, then which day of the month, and again when it's what date of the month and what day it is. Okay. Mr. Anant was entrusted with the responsibility for calculation of DTL, demand and time liability. So again, that is bank audit. On 31st March, the total liability stood at 250 crore. It includes the margin held for funded facilities 4 crore, credit balance for one branch of 6 crore, adverse balance of the Nostro Mirror account of 3 crore, and unadjusted deposit for the agency business of the 8 crore. Okay. Wife of CA Dharam was also chartered accountant and was actively involved in the purchase and sale of shares. She purchased 500 shares of Shambhav Limited of 100 each, right? So it should be Shambhav Limited of 100 each for 9 lakh. All the required communications were made among the joint auditors and significant matters were discussed with TCWG. At the end, an unmodified report in accordance with SE 700 was issued, which was signed by all the three joint auditors. On the basis of the above mentioned facts, you are required to answer the following MCQs. List down all the months whose date has been selected inappropriately by CA Dharam for calculation of the SLR compliance. Okay, right? So they have done the checking of odd dates in different months of the year. But we study it over there that an SLR के 12 odd dates in a year, not being Fridays, not being Fridays. Why not Fridays? Because Friday is the date on which the branch auditor reports to the central statutory auditor. That is why not Fridays. Okay, right. So now you see in the month of the yes, Saturday, Monday, Wednesday, Friday, and then again the Friday. Right, so that means in the month of July, August, and October, it has not been appropriately selected. Right, so January, February, March, July, August, October, June, July, October, May, and November. Right, so what would be the correct option over here? July, August, and the October. Okay. Next one, a little bit of question where we could have some deliberation. While calculating the SLR compliance of Sambhav Limited, what will be the value of the demand and time liability as on 31st of March? Right, so what is the demand and time liability given in the question? 250 crore. Right, and it includes the following. And what is one of the option that keep it as it is 250 crore itself, or 246 crore, 236 crore, 237 crore, or the 240 crore. Okay. Right. So what does it say? It includes the margin held for the funded facilities of 4 crore. So let us go to bank audit and see whether margins held and kept in sundry deposit, is it to be included in liability? No, it is to be excluded. So what we will do, 250 minus the 4, right? 250 minus the 4 crore. Then credit balance for one branch of the 6 crore, right? So now next one is the credit balance of one branch for the, yes, credit balance of the one branch, right? So net credit balance in the branch, that is to be included in the liability. So that is correctly included. So no need to make any change over there. Okay. Right. Then after that, adverse balance of the Nostro Mirror account of the 3 crore. So adverse balance of the Nostro Mirror account, right? So again, if you check over here, the reconciliation of the Nostro with the Nostro Mirror account needs to be scrutinized carefully, and any adverse balance in the Nostro Mirror account, right? So now again that is to be included, because again it's your liability. So again that is correctly included. It's already included in the liability. And the last one, unadjusted deposit for the agency business of the 8 crore, right? So unadjusted deposit for the agency business, right? So now that's a deposit that you have paid, unadjusted deposit lying with the, or balance lying in the link branches for the agency business, right? So that it says margin you have kept. So that is not your liability. Unadjusted deposit. So again, it's not your liability. Amount received in Indian currency, not a liability. So that is why, what does it say? All of this is to be excluded from the liability. So again, unadjusted deposits that we need to exclude from the liability. So it's -4 and the -8. Right, -4 and the -8. Why? Because these two are to be included, right? So what is to be included? The credit balance for one branch, it is your liability. Adverse balance of Nostro Mirror account, it is your liability. But margins held and the deposits is not your liability. So that is why 250 -4 -8, right? So that's 250 -12, which is actually coming to 238 crore. But here the option that we have is 237 crore, right? So anyways, 250 crore is not going to be the option. So yes, I think that this option over here should be the 238 crore. But if there is any scope for understanding or any other interpretation that you have, you can let me know about it. Because it says credit balance for one branch, right? So credit balance, that means again it is your included, it's your liability, you need to pay it. Then the adverse balance of the Nostro Mirror account, so that is also to be included. But deposit and margin, it is not your liability, so it is to be excluded. Okay, right? So probably we can check some other source also from where this particular is given in the study material. And some, it's very rare, so don't make it like, oh, the option is wrong or something. No, one blue moon, like such type of a circumstance may occur. Okay. Dharam will be disqualified after his wife purchase. Will Dharam be disqualified after his wife purchase the 500 shares of 9 lakh each? Right, so this is regarding the disqualification under 141 3D1. Okay, right, so Dharam will be disqualified as an auditor as relative own shares of more than 1 lakh market value. So it doesn't talk about market value. Dharam will not be disqualified as the auditor of Sambhav Limited as relative own shares of less than 1 lakh face value. Again, will not be disqualified as relative own shares of less than 10 lakh market value, and will be disqualified as relative own shares in Sambhav Limited irrespective of the amount. So it's not irrespective of the amount, it is less than 1 lakh face value. That is why will not be disqualified. Okay. And which of the following statement is true, right? So what are the permanent consolidation adjustments and the current period consolidation adjustments? So let us come to the question again. Right, so permanent consolidation adjustments, there are those given over here. Right, so what does it say? These adjustments were related to determination of goodwill of 3 crore. So goodwill capital reserve arising on consolidation, permanent consolidation adjustment. Determination of the minority interest, that is 75 lakh. Again, that's a permanent consolidation adjustment. Some intra-group transactions, so that is elimination of intercompany transaction, current period consolidation adjustment. And harmonization of the accounting policy, again that should be related to the current period consolidation adjustment. Okay, right? So what does it say? 75 plus 3, that for 78 crore should be, sorry, 3 crore plus the 75 lakh, right? So 3.75, right? That should be 375 lakh. That should be the permanent consolidation adjustment. Okay. right? So what do we see over here? 397, 420, 442, 375 lakh, right? So 3 crore plus 375 lakh, that is your permanent. And then the current period consolidation adjustment, what is the figure? 22 lakh and the 45 lakh, right? So that is the 67 lakh, right? So 67 lakh, right? So what does it say? The option D, right? For the permanent consolidation adjustment of the 375 lakh and the current period consolidation adjustment of the 67 lakh was to be made. Okay. In the given situation, whether the engagement letter was properly issued by the Sambhav Limited, right? So principal contents of the engagement letter, it will include the objective and scope of the audit, responsibilities of the auditor, responsibilities of the management. Oh my God, that is not given in the question. Identification of the AFRF and the expected form and content of the report. So responsibilities of the management are missing. Let us see the options. Engagement letter issued specified the identification of AFRF, whereas as per 210, there is no need to identify the AFRF. Wrong. Engagement letter does not specify the responsibilities of the management, whereas as per 210, it should specify the responsibilities of the management. Engagement letter issued the form and content. However, as per 210, form and content not required. There is no discrepancy in the engagement letter issued. No, there is a discrepancy. Management's responsibilities have not been given in the engagement letter. Okay.